Greetings investors and welcome to our weekly crypto market analysis where we discuss the on-chain data and try to predict where the market is headed. Despite a discouraging start to the week, Bitcoin is finally showing signs of recovery as it gained 7.8% in the past 48 hours and climbed back above the $55K mark. Looking at the on-chain data, we can see a rapidly declining confidence in the top coin's future price potential. Bitcoin-related social sentiment has experienced a strong decline over the past 48 hours, reaching the lowest levels since the beginning of Bitcoin's rally back in October and suggesting a growing concern about the latest correction. In line with the social sentiment indicators, we have also noticed several outlier spikes in the combined mentions of sell and Bitcoin on crypto social media during the week. The spikes coincided with Bitcoin's Monday and Wednesday price corrections. This is also why Bitcoin's plus 6% uptick over the past 24 hours doesn't come as a surprise. If you're frequently watching or reading my updates, you'll know that a bullish bias and irrational market confidence have rarely been a friend to digital assets. For Bitcoin in particular, extremely positive sentiment has often coincided with local price tops and periods of price consolidation as the market approaches peak height and social data begins to signal overvalued conditions. It's also worth pointing out that Bitcoin's perpetual contract funding rate has been in a state of decline on most high-volume exchanges. The rates are currently in negative territory, meaning that there are currently more shorts than longs. While the crowd is extremely bearish and is panic selling their coins, large institutions keep accumulating. We can see this by looking at the supply of coins on known exchange addresses. As you can see from the chart, the supply is in a sharp decline. Furthermore, miner outflows are currently below the yearly mean, meaning that the miners are not willing to sell their coins at those levels. This suggests a further upside potential and is another very bullish indicator. Last but not least, if we take a look at Bitcoin option expiry dates and the price action after it, we can see what is coming. March options expired yesterday, and I do expect a big rally in the coming weeks as most indicators paint very bullish signs. Now let's take a look at Diversitas, our actively managed strategy on the economy platform. This week lost roughly 7% as most of the market was deeply in the red. It is not our best week, but looking at the monthly time frame, we are still up over 40%, so I'm quite happy with our performance lately. The focus of our strategy remains Bitcoin and Luna. The reason for this is simple. Bitcoin is getting adopted by major institutions and is looking extremely bullish, while the Terra ecosystem keeps rapidly growing. This week their stablecoin got listed on 2 exchanges while the Anchor and Mirror protocols keep growing. All this is driving up the demand for their USD stablecoin and keeps burning Luna. In the past 5 days alone, over 7 million Luna tokens were burned. Considering the current burn rate and the fact that the liquid circulating supply of Luna is currently sitting at roughly 161 million, I do expect a parabolic rally in the coming weeks as supply shortage starts to kick in. The current Luna setup reminds me of Ethereum during the ICO boom, and I would not be surprised to see it rally just like Ethereum did back in 2017. As always, if you would like to copy our actively managed strategy that so far generated over 3,300% return and has significantly outperformed Bitcoin, check the link in description. You can copy our strategy with a single click using the economy platform. If you are already following the strategy, I would like to thank you for your support. I hope you are enjoying the ride with Diversitas. See you all on the moon.